Greetings, market rebels. Welcome to this week's sector situation. I'm Wayne. It is actually Friday, June 7th, 2024. It's a few minutes in front of 5:30 p.m. here on the East Coast. The market is closed for the week. We're going to take care of sector situation here a little early. Here's our trustee market rebellion disclaimer. Here is our trustee market rebellion intellectual property rights notice. And here is our slide of the week for macro measure. If you can make sense out of it, but I always try to keep it here just in case I reference anything. And if you can mind read or whatnot, you can figure out what we covered in macro measure. But really, I'm always honest about this, or at least I try to be. Upfront is probably a better word, but really trying to make a prediction in front of the FOMC is very, I think it's just very difficult, and even having a strong lean, I think is very difficult, especially the way this market was finished. I'd call it a mixed bag mess this week with new all-time highs even being made today. But the way the things finished out and the lack of participation, the narrowness, some of the sectors which we'll look at that just stopped working or started to work and then just paused. It just really wasn't that impressive of a week. And there's problems out there in breadth-land. And of course, there's a lot of problems in reality that's been ignored to a great extent at this point. But remember, there's a lot of catch-up potential in this market in the IWM, for example, and maybe even some of the other major index ETFs, just simply due to inflation repricing things higher. So on that note, let's stop the share and let's get our charts going. We kind of keep the discussion minimized in sector situation. Let me get the right charts brought over, and let's see if I'll get the right screen shared. This one, and then let's get, I don't know why this wasn't there, but it must have moved on me. But anyway, this is our grid of 12 that we'll get started with. I just want to make sure this is showing, and it is good. And so I'll try to pop everything up a little bit so everybody can see the action. But XLC was a lot like SMH this week, just to stop there for starters. So it had that really strong pop and then sort of reversed off that Thursday high on down, and then just didn't get it together in a big way today and gave up a little bit more. And that was a lot like the SMH, which we'll look at, but I feel like it was sort of like one of those weeks where things were looking good. We came in thinking that the market had done enough downside work, got oversold enough inside of this uptrend that we've been in now since we bottomed in October last year, that there'd be potential for a little bit of a rally to start the week, more than likely, right, assuming news neutral. That turned out to probably be the right way to come into the week thinking, and it did start out, I think, in that way, but it just didn't really get great follow through. And so that's been the case for the market a little bit of late. That's one reason why I kind of have gone from being really impressed by the market on the chart basis, right, just looking at the charts on the whole, to being a little less impressed by it to now a lot less impressed by it. Doesn't mean anything. The market does at times get really harmonically stellar, and other times it doesn't. As a technician, I think you'd prefer when it's all firing according to plan, and your plans or Charles Dow's plans or someone's plans, but it just really hasn't been there. The market breadth hasn't been there along with it. We talked about that a little bit in macro measure on one screen that we check out somewhat regularly. So I'm looking at it like, okay, well, XLE still correcting, right? I thought by now they'd try to do a little more than this, but there's been a couple fits and starts, but it's really not gotten out of its own way. Now, this is going on right into really you could be at month 3, I think, for this kind of activity next week. If we have another kind of dud week where it continues to drop, or it tries to move up, but only does so marginally. XLK, you could see right there with technology, right, with the Qs making a new high, didn't really do it. With SMH, going berserk earlier in the week, wasn't able to do it. XLC did, but then again, much like SMH, it acted very similarly, didn't finish strongly. So this is not an impressive column, right, that we're looking at right here. The XLF sort of, right, not the end of the world, but sort of a triangle that it's in right now, right? I don't really want to lay lines, but if I just trace it out with where the lines would be, you get the idea. So that's, triangles are some of the best definitions of right indecisiveness, like what's going to happen. So there's nothing really telling us that anything there. It could break out, it could break down. XLRE lower high gets put in, but it did rally this week a little bit, right? It tried to rally, but I'm sorry, it did rally a little bit, but then it backed off. And this is what I'm saying. It's a mixed bag this week. XLV, which is defensive sector, had a very good week, right? So we got to give that to it. It built on the turnaround it had the prior at the close of the prior week. XLP did some decent work, but not such a great finish. Decent work from XLY, okay, but decent finish, but nothing wonderful. Certainly it did not break out and take out the highs. You have a lower high potentially here, just at this snapshot in time in XLP. XTN, right? This is one of our canaries. This is just not acting well, right? It's just a candle one bad day away from being at threat of making even a new low with the next candle, more than likely. So that's not acting well. Could it build on this? Yes, it could. But could you maybe see a higher low get put in? Yeah, but we've yet to see it, right? We don't know that yet, but that could happen. XLB, that is not a good looking week right there, right? Where you drop heavy, try to bounce, and then you end with a lower low being made on Friday and the lowest close of the week being made on Friday. So there's basic materials under pressure. XLI, which confounded me for the longest time, but it too, right, had a rough start to the week, tried to rally, but kind of finished off a little bit better shape, I think, than XLB. And XLU, which has been going bonkers thanks to the demand for power, that finally rolled over after that kind of double topping action that we saw maybe starting to form late last week. So maybe there's more retracement there, but that's kind of the quick view. Let's see what we can pull out of this and look at some other things on our more expansive view. And I'll try to go through this. And I thought that I guess I had to move that stuff there. Let me see. Let me see where this is. And that's in my way. So I don't know why that switched on me from one screen to another, but it did. But anyway, we're back where we should be. I just like to have these for reference. So I'm going to try to go through those and other things just to see if anything really pops out at me. And what pops out at me here is just disappointment. Right, your SMAs are keeping this thing in check on the downside as they roll over. So declining SMAs seem to have the XLE's number. The retracement, right, is at risk of being greater than 50. If you're a bull, right, you really don't want to see that. You want to keep it to 50 or less, ideally 38.2 or less, but you're not getting that. There is big SMA support coming in the form of the 200 and 150, which are really close in proximity, though. So that is that. Wouldn't be surprised if a little 50% retracement shakeout, getting people to think we're on our way to the next fib lower, and then they do something. So keep that in mind. But excuse me, that's just not a great look. Doesn't look all that great right now. We know, though, that market, things can change quickly, and certainly geopolitical. There's all kinds of things that could change very quickly there. So I wouldn't say that is a goner. It's just that it doesn't look good at this snapshot in time. We need to see more out of it. XLK, as I said, much like what we covered in macro measure, where you've got similar highs, slightly lower high here, but you've got worsening readings on your basic indicator group that we've got down here, rate of change, RSI, MACD with a histogram. So it's not looking that great there, right? That again could change. You are, though, above all your SMAs, so give it the credit that it's due. But again, I think this is just waiting on what does the Fed have to say? How do they couch everything that they say? What do they do? What do they indicate? And that's really unfortunately, that's going to determine your fate, no matter what incredible chart revelations I could possibly dream up right now, or anyone else could. Maybe some financial astrology guys know the answer already. but I never got deep enough and confident enough in what I was doing with that stuff to say, yeah, here's what's going to happen. That's just never became my. I did delve into that. I wouldn't dismiss it at all, but I just don't specialize in anything like that. So here's the breakout of XLC. Unimpressive finish. Does it go back and close the gap? Probably does. Would it be kind of coming back to see if it could convert former resistance to support? It could, right? That might be what you're in the process of seeing here. So I think your rising 10 is your number, right? You really want to hold on to that and then try to bounce if you're a bull. And the rising 10 right now is at 83.61. So you're talking about going down a little bit less than 1%, and you're thinking it should find support there, and that'll close the gap. So if it's able to do that, great. If not, if it can't hold there, then you start looking at some of your other SMAs for support and flat lines and other things like that. But I don't think you should worry about it being extended beyond the Bollingers, because the Bollingers there are fairly narrow. So it doesn't mean it can't correct more. I'm just saying that it's not super stretch where it's got me quaking in my boots to go long. I would definitely go long this if the Fed green lights more upside in whatever they decide to, however they decide to tinker with our lives. Let's see, XLF. Um, this is consolidating, right? You have the triangle that we talked about. We'll just trace it out a little bit since we have something good to view here. As I say, boy, Thinkorswim starting its shenanigans on me. Not a good sign. There's your bottom part, and I think there's sort of this, if it lets me draw, there's sort of a flat-ish line here that I'll just use a trend line for. And I think you're kind of close to it there, and you're working your way right towards the end of the apex. And usually you don't get to the apex out here somewhere. Usually you get 3/4 of the way through, and you should start looking for a breakout or breakdown. But those are kind of your levels. You need to take out Friday's high, and you could probably say the 50-day there in gold would be your telltale trigger levels, I think, that of significance at the moment. But look, it too is still on an uptrend. It is above most of its SMAs. It's hanging in there for now, right? So again, I would tend to, if I'm perplexed about something, I tend to give the benefit of the doubt to the trend, and the trend is up there, but it is consolidating, and I do think we just drew the levels that matter. Real estate, right? You could say, well, this is consolidating too, because this high and this low, right, are both beyond the current swing low and swing high. So you are consolidating in there as well. There's not much to really say about that. There's a good chance right there. We all kind of know there's problems looming there in commercial real estate. We've had some trades on that, but it's been a lot of these bearish things that have appeared here have been early, to say the least. We tried them a couple times because of the issues that are there. You just don't know when that news could start to become more front page type news, but it hasn't really been there. It just hasn't become anything special. There's nothing special there. You may as well use those swing points if you're looking for breakout or breakdown. XLV, as we noted, had a great week. Same thing here, right? Your indicators, oscillators not registering the kind of momentum you had here. So a little bit of a loss of momentum and a similar high at the moment. These upper tiers towards the 147, 148 level have proven to be pretty challenging for XLV. Again, you got to wait for things to develop. Right now, clearly the bulls are in control. Probably the biggest issue this thing has on its hands is that it's in the 60s on RSI in most places you look. So it could get overbought quickly, which is not what you want to see when it's so close to resistance that's mattered 3 times this year so far. And that is the highest highs we've got on this chart. So you really would rather see it sort of pull back a little bit, take its sweet old time, take the overboughtness out of it, kind of work its way up with a higher low that's somewhere near here and then burst through. And that could happen. So worth keeping your eye on if the bull market action stays intact. That thing sort of hesitates again, puts in a higher low, and then the market itself starts breaking out, and maybe it does along with it. But certainly worth keeping an eye on for that to resume, because this did have a great run. We were talking about it a lot, like, boy, it's really on fire. That ended, obviously, and then it's been 3 months now, roughly speaking, of consolidation. So that's pretty good duration, right, to be able to allow something to resume. So I think that's worth keeping on your watch list, kind of like that trade that sometimes it's really good, but a lot of times it isn't, and so you got to be there when it is. And I do think a breakout there in the bull market would be possibly a really good sort of like overlooked sector to keep an eye on some of those names at the very least inside there. Another, right, XLP. Want to see this one sort of back up a little bit. You want to see the XLY start to ascend. Did a little bit towards the end of the week, but again, nothing special here. Lower high, double top, whatever you want to call it, slightly worse readings on the indicators, oscillators. Still, though, holding above all your SMAs and not far removed from the highest high. So mixed bag, exactly what I've been saying about mixed bag mess, sort of, is why I called it that on macro measure this week, because it is. I feel like it is. Let's see here. This is the XLY. I mean, the chart to me looks encouraging, right? Discretionary here looks encouraging to me, that it's not overbought, and it's now again, right, at a level that's really respected this SMA, this 50 in gold. It's near the 100 and the 50 right now. It's just barely below the dashed 100. You get above there, you're above all SMAs. You have a higher low, kind of cluster higher low put in versus here. It wouldn't take much to really clip this high and then go. And that would probably take you back towards here. So I think another one that if the Fed does what the market wants, what the bulls want, this could really be, after kind of being sloppy for a while, this could start to reassert itself. And if it does, there could be something really good there. So I would keep an eye on that, and the names inside of it more so than the ETF, but which is almost always the case. But Walmart, we did have some paper on, and Walmart's been doing really well lately on the chart. I felt as though the call buyers we saw were more of a hedge, and so I didn't want to get involved in a trade idea there today. But I guess it did turn out to be that way. But I don't know if I could show that, but I don't even know if it's worth it. But anyway, the reason I'm bringing up Walmart is because depending on the weighting and whatever ETF you're looking at for retail, that might be something that needs to take a little bit of a breather first. So you might have to look for some other names. But yeah, the XLY, XLP, the XLY, this is a little interesting in my book, just because, right, you've been consolidating. The range in the consolidation has really been from about 170 to the 180s, 185-ish on the highest one. So there's room there. If it can go, you probably have 4 or 5% for the ETF itself. And that just starting to look good, where they're getting a little more aggressive on the buying versus this low here. So that's something maybe that bears watching. So I'd keep that in mind and just drill down and see what you like inside of there, and maybe you'll find some good stocks that you'll be ready to go after if the market resolves itself to more upside. This is one of our canaries, the XTN. You can see the intermediate trend for the last month and a half, 2 months is just down. It's below nearly all SMAs. A lot of them are rolling over and they're declining. So this continues to not look good. There's a big gap down here that, every Tom, Dick, Harry, and Jane probably is expecting to close. Probably will, just a matter of time. But I only pay attention to these things when they're on their way and they start to get within the range of, we're in a really ugly phase where things fall apart. That could happen due to the Fed, not predicting it, just saying could. So I would keep that in mind as well, because if this we get that negative Fed situation developing this week, midweek, beyond, and things are not that rosy, we do see profit taking and the buybacks dry up and the start of the month money's gone and all that. You might finally see something, especially in a weak sector. That would be a natural sort of gravitational, place to pull to. So in kind of that risk off scenario in the market, excuse me. Now let's take a look at XLB. XLB and XLI kind of, they're finally acting a little bit more like I just my dumb self thinks they should in terms of the fundamental side. Like I'm just wondering with the world and sort of being the world right now, how in the world are these big ticket items in XLI and things like that being bought? But the XLB I understand being strong a little bit more, at least in my mind, than XLI. But look, you got the lower high, you've got the higher low as of now. But look, the close was rough. So this is looking a little concerning. You do sort of have the triangular action. I'll just quickly drop a line there, quickly drop a line here, just to sort of, well, Thinkorswim doesn't like what I'm doing. I don't know why. Anyway, you get the idea on the kind of triangle, not perfectly drawn thanks to Thinkorswim's stickiness right now. But look, you're working your way towards the end of that, the apex. And so again, you would expect something, not necessarily Monday morning, but you'd expect something sooner rather than later if this thing starts to move beyond its resistance lines, and that could happen quite easily on the downside. It would take more work on the upside, but that's what you get, right? You've got a higher low, you've got the lower high, so you're consolidating. You're working your way through the triangle. When it resolves one way or the other, there could be a good trade there. I think it's pressured now, though. I think it's got its work cut out for it, and clearly it could break down through support much easier than it can break up through resistance. But with a wild card like the Fed, you never know, right? That could shift things dramatically, obviously. XLI, again, for me, XLB being strong makes a little more sense, but XLI, not so much. But a very similar chart. We could go ahead and try to, not exactly the same. We could sort of draw like a different type of triangle in here. I don't think it's worth it. At this point, you may as well just use the 100-day that's rising there. You may as well just use the declining 20. And so you're really in the no trade zone, right? Until you start to see expansion of the range beyond one or the other, why get involved in this, right? It's not really this great trader anyway to begin with. So you might have some individual names in there that you want to look into, but I would set alerts right in front of those levels, right? I would probably put something at 123.54, probably, where's the 100-day? 120, 121.50, and then start getting ready, especially right if it's swimming in the same direction as the market. But as of right now, I think that does also have its work cut out for it. So those don't look good. XLU finally double topped. My guess is it probably had, because I didn't look at it. Yeah, like you could see, this is the fallout right from negative divergence. The last three sessions. So when you get the negative divergence, similar high, pretty poor readings here on your momentum indicators, if you will, you get this pullback. And that's what I'm a little worried about in some other areas too that are becoming concerning. So there's the grid of 12 that we typically cover. Let's take a look at some of the commodities as well. Copper finally went into heavy pullback mode last week and the week prior a little bit. And now look, you're making a new low. So as we said, it's kind of returning back towards the range that it typically was trading in. This might be the aftermath of sort of like market internals where there was, a lot of squeezing and stuff like that going on. Was a little disappointed in the metals. I thought the metals might be trying to perk up a little bit this week, and we did see some UOA, but they went into heavy retreat mode and went the other way. Clearly, the dollar screaming, rates roaring, probably played a large role in that. So that took a really ugly turn, and if it doesn't hold, probably the lows that are not too far down from here. What's the low that day? 22.85. So yeah, 22.85 probably opens the door to the 100-day, and that's at 22.19. So you would drop, have a decent drop if 22.85 doesn't hold. You'd probably drop into the rising 100. So that's not very good. let's take a look at SMH. I'm sorry, I meant to do oil first. We'll take a look at that. And I'll take a look at wooden cuts since we do kind of look at these commodities a little bit in relation to these sectors. There you go. If you want to know why the XLE continues to struggle, just keep an eye on crude, right? That did bounce off the bottom, but overall, right, the early part of this week was rough. There you go on that. Let's take a look at wooden cut. We've been using these sort of in line with XHB. Rough stuff right there. Probably cut will look similar. It usually does. Again, rough stuff there. So now let's look at XHB. And that's having a rough go of it as well. So it all kind of fits together nicely like a puzzle. You're really close to taking out this low here. That's the lowest low within of the last few months, and that would open up the door towards the 150 down there a little bit more. So that level seems to be where what are we near on that? That would be I got to come over here because Thinkorswim switched on me to percentages about 97. So that's a few more percent lower, right? If this low gets taken out, which is not too far removed from today's low. But yeah, the charts definitely have changed there. And I think the pressure is definitely on bulls at this point. So they need to sort of hold this thing here or nearby. Otherwise, they are risking more technical damage to it. And I don't know what that means for rates, though. It wouldn't seem to be a good thing for rates if you kind of tie all this stuff together. But let's take a look now at SMH before we forget to do so. Clearly, right, this is the leader sector. As I noted in macro measure, if you don't watch that one, not really what you want to see. I mean, this is, right, sure, it had a good early pop thanks to the NVIDIA pop, but it really, the way that things finished out, not great. But as I said, still above all rising SMAs, which are basically stacked and positive, all positively sloped. So not a good sort of snapshot we're catching it at right here, where you make this new high. But right, how bad can it really be if you're 1 day removed from the all-time high? It's not that bad yet. There are some negative divergences cropping in here, just like we showed in other things like major index ETFs. It's not all that wonderful. I did not look at XAU. We'll look at that one. I could look at GLD and SLE, but look, with the dollar doing what it did, that kind of explains it for you. I think right there, rates moving up as well. Gold and silver ETFs probably got spanked. And again, this is why I try to remind folks in UOA that the timing can be great on some of these, but some of these folks are definitely hedgers that want to just take synthetic positions. That's just the way it is. That's the real world of options trading. I think, I wish it were, as just clear cut as, hey, somebody did this, but there are different markets that works in. When you have a real kind of go market and a lot of money's flooding in thanks to the powers that be, and subsequently investors are flooding the market with that money as well, it can be that call buying is really legitimate call buying a lot more than when something's made a dramatic run and somebody wants to fight against that trend, like we've seen here. And then you tend to get hedges that are for short stock positions. Anyway, that's a whole nother thing. I'm trying to think of what else we should cover, haven't covered. What else I can cover that we typically get into. I think that might be it for now. But I think, the bottom line just remains, I can sit here and spout off about this, that, or the other thing, but really what matters is the FOMC, what they've got to say, what people make out of that, the fallout from that. That's going to determine it. Usually, right, the summer of the presidential election year is quite good. June being part of the summer, July being part of the summer, August being part of the summer. Those are usually pretty good months in this type of a cycle that we're in right now in this fourth year of the cycle. So not that it has to be, but they typically are. So I wouldn't be surprised if it stays that way, that a presidential election cycle performance has been tracking pretty darn well now for probably about, well, is probably getting close to about 19 months, I would say, somewhere in there, in that neighborhood, where that presidential election cycle performance has been very good in terms of the correlation to the past periods that are aggregated or of a similar nature. So yeah, just keep that in mind that's where we're in. So the trend's up. That's what the cycle calls for. Summer's typically good. We know that the Treasury, the rest of the powers that be, are doing everything they can to rose-colored lens this whole scheme. So there's no reason to think that will change. There's another reason sort of to think that there's more upside possible. I still do maintain, though, that I'm getting a little spidey sense simmer. The spidey sense tingle is still on like a low simmer, but it's there, and I still feel like there could be that so-called black swan, maybe gray swan type of thing between now and the election. I don't know what that is, obviously, or I would try to share it, but I do think there's just some things out there. I don't know if it's geopolitical. I don't know what it will be, but I do think you need to be, if you've had a great run since this market bottomed, you need to talk to Greg and Ryan about rolling if you're unfamiliar with the best ways to do that. And you ought to know how to quickly put on a collar trade so that you can hedge where you are and really not give much back without really, basically you can ensure your downside by capping your upside. And that way you just sit tight while there's maybe some bad stuff unfolding, but you're not really losing net. You can set things up that way. So these are good things to bring up with Ryan and Greg during our webinars during the week. But yeah, be smart out there. Be ready. I think you could have some volatility for sure this week with what happens. That's not a breaking news or anything groundbreaking, but you just sometimes with the market, people lose track of that kind of stuff, believe it or not. And with the VIX barely above 12, it seems like there's complacency out there. So just something to keep in mind, maybe not such a sector situation thing, but it's more of a macro measure. But yeah, I mean, I think overall, you could see that there's a little bit of messiness out there. There's some things that are correcting or not performing, some concerning things like IWM and XTM that are just really not helping the market's cause. Technically, if you ask me, other things that were working that are sort of rolling over, other things that are pausing, other things that sort of kept trying to work but didn't work that impressively. So overall, not really a great situation. We've seen it a lot better. We certainly have seen it a lot worse, but we've definitely seen it a lot better. And you would think, unless you're getting like you get to the late stage of this bullish run, you would think things would look a little bit better on balance, but they just don't. In my opinion, they just don't. So yeah, I'm a little more concerned again this week. We thought that was same as I was about, I think 2 or 3 weeks ago. And then we kind of got a little bit of a pullback after that. I think it was right to be a little concerned. I think the wild card clearly is the Fed, though. We don't want to get too far over our skis in front of the Fed. But you just got to be ready for what may unfold and come your way this week. So once again, I always say this, but I do hope that something I shared helps you this week or some week in the future. I want to thank everyone for tuning in. Everyone have a safe and very enjoyable weekend. And we will see you next week when we start to ramp things back up again. Thanks for tuning in.